If you want to make money in trading, this is what you need to follow. I was an algo trader in my first job and I learned all of it on my own, step by step. Trading is like a drug. You feel excited, you feel angry, you feel pleasure, you feel sadness. You actually don't need people. You experience navarasa, emotions within you. Now, you can have a life where you can travel. You don't need to listen to a boss. You can be the boss. You just talk to markets, make money, get out, and move to your next destination. But you know what? Less than 5% of the people make money in trading. 95% people are losers. Here is a step-by-step to move from 95% losing to 5% winners. I'm going to tell you 7 steps which will make you a better trader. Step 1. இது வந்து daily 1 hourக்கு ஒரு 1 week பண்ணுங்க. Forget everything you have learned about stock market, trading, anything. First step is go open any chart. Take a 5-minute chart, 1 hour chart, anything. And observe these 4 things. Open, close, high, low. Either based panni, imagine when the trend is forming, when the trend is reversing, at what times the market is moving sideways, and observe even volume. And you should do it every day during market time or afterwards. And then end of the week, you should make your own notes on when does a trend form, when does a trend close, when does a continuous pattern happen, when does a reversal happen. Next week, your target is going to be predict where the market is going to go up or down. Do this without using any indicators, without using any candlestick patterns. You have to be the observer of patterns. Forget everything you've learned. Next week, you should look at everything in the market and start predicting prices. Make notes. See whether you have a 60% success rate in seeing whether the price is as the way you predicted. For example, Nifty will go up is one prediction. Gold will go down is another prediction. Take 5-6 charts. Make a note of every chart and see whether you're consistently making a 60% success rate. If you have reached 60%, you are halfway better than 80% of the traders because they get confused with all the patterns, but you have figured it out on your own. Step 3. In case you didn't do this, in case you're still below 50%, you need to keep doing it until you succeed. The third part is now you need to better your strategy. How do you better your strategy? If you're making 60%, how do you make 70% success? The first thing you need to learn about is indicators. What are the different kinds of indicators? One is a leading indicator. அது என்ன சொல்லும்னா வந்து price மேல போறதா அப்படிங்கிறது உங்களுக்கு அப்பவே சொல்லும். The other one is lagging indicator. எல்லாம் மூவ் ஆன அப்புறம் ட்ரெண்ட் எல்லாம் ஃபார்ம் ஆன அப்புறம் சொல்லும் ட்ரெண்ட் வருதான்னு. For example, a lagging indicator is a moving average indicator. When a 14-day moving average crosses a 30-day moving average from below, it means the price is going up, the trend is going up. Now, this is a homework for you for the 3rd week. You should learn about Bollinger Bands, you should learn about MACD, you should learn about moving averages, and you should learn about RSI and money flow index if you want. These indicators will make you better your strategy. Week 4, use these indicators and now increase your success rate. See whether you're able to touch at least 65 to 70% success rate in predicting, simply predicting whether the price will go up or down. The last and the most interesting thing is now you've got a 70% success rate strategy. Now, how do you put the money behind it? Money management is the next important aspect of it. How many of you have played roulette in casinos? You'll roll a ball and you should check which number the ball will fall. You use something called the martingale strategy. I'll tell you how to apply in the stock market. Now you have a 70% success rate strategy. Now let's say you start with 500 rupees and you get a buy signal. You take the trade, but then you end up with a loss. The second time that signal again gives you the buy or sell signal, you don't put 500 rupees. Because you lost 500 rupees already, you will double it, which means you will put 1000 rupees. Now, let's say even second time you lose money, you lose 1000 rupees. The third time it generates a signal, you don't put 1000 rupees, you put 2000 rupees. So you keep multiplying it by 2x, 2x, 2x because you have a 70% success rate strategy. It can't keep going wrong always. Some point the strategy has to give you money. But when it gives you money, it gives you big money. And that's how you make your 70% success rate strategy into a profitable strategy. This does not apply to all markets. You know why? Because market makers and algo traders will eat you for breakfast if they know your stop losses, they know at what prices you buy. Now, how do you get out of it? Choose a market where there is high liquidity. Second,
you should be smart enough that if you know a little bit of statistics, you know prices are not stable to predict, but relationship between prices are more stable to predict. For example, if someone gives you a buy call and you buy HDFC Bank, now suddenly there is bad news in the market, some bank has given bad debt and the trade falls. It doesn't matter what strategy you indicated, but the trade falls. Now, all your strategies will go for a toss because there is a fundamental bad news. A little way to protect yourselves is, if you buy HDFC, short ICICI, assuming that the relationship between HDFC and ICICI is constant. Now, if there is a bad news in the banking market, HDFC will fall, ICICI will also fall, and the short will make you money, the buy will make you losses. Net, you will not lose so much money. Now, if you actually trade relationships, you make better money because relationships revert to mean. All your indicators work better when you have a pair or a relationship which you're trading. For example, USD INR is a constant relationship. There is a relationship between the two currencies. Nothing will change overnight. Price movement is simply based on demand and supply. Now, India will not fall overnight. US will not fall overnight. There will be some news once in a while, but otherwise only demand supply decides the market, and you will have a better chance of operating in markets which are less manipulated, have less news-driven movement, and your demand supply decides your price. The most important aspect of it is when you have to trade, since you have to double your money at each losses, you can't trade with 5,000, 10,000, 20,000. No, you need at least 1 lakh, 2 lakh, or even 5 lakh so that each wrong trade, you're able to double it with a winning strategy and make bigger money and take bigger bets. So it's very important you use leverage. If you trade only in stocks, let's say you want to be only 0.5% profit, but you work on, let's say, a 5x leverage, 10x leverage, 20x leverage. Your 0.5 into 10 is 5%. If you make 5% a day, your money is compounding at a crazy rate, right? So you need to use a market where you get leverage, which means futures. In the 5 condition follow pannu. 1, without 2 lakhs to 5 lakhs capital, don't go into trade. Because each loss-making trade, you need to double and have more money to make it profitable. Second, you need to use leverage because even if you take a trade for 0.5% movement, if you use a 10x leverage, you're making 5%. Third, until your strategy can be made into an algorithm, a rule-based process without emotions, you will not be a profit. Fourth, your money management strategy, what I gave as martingale, is just an example. Figure out what you're comfortable with and figure out more money management strategy. Last but not least, trading is not for the faint-hearted. Don't be greedy. Respect the market. It's collective intelligence. It's the most spiritual experience you can have with money. Paper la modala trade edunga, mock trade edunga until you make money every month in every market. Cars at stock market la podadinga. ஒரு பைசா கூட போடாதீங்க. பேப்பர்ல சக்சஸ்ஃபுல் ஆகுங்க, அதுக்கப்புறம் ரியல்ல ஆட்டோமேட்டிக்கா ஆகும்.